when I was 20 years old, the weekends were a source of anxiety, where every one of my friends were all like, "Yeah, I'm cutting loose." Either they're rolling up a fatty and smoking a doobie with the rest of my friends, or they're getting drunk or waking up with girls or guys that they just met the night before. And I would be sitting there anxious about the trades I'd be missing in the coming week. I would be obsessively thinking about what happens if I watch the charts and I draw out my charts and then I miss the moves. And then I'll have to wait for another week. And I was always constantly worrying about what if, what if, what if. And maybe it is similar to you. Maybe you're thinking the same thing, but it's even worse for you probably because you're learning from me. And I have a lot of things that can get into a trade. I have lots of entry mechanisms, lots of conditions and setups that would yield a limitless opportunity. But that limitless opportunity causes you to feel like, which one's right for me? Which one's right for me? And that, unfortunately, is one of the most expensive things when you're learning from me because I can't give that to you. That's something that you're going to have to discover on your own. And a lot of it's really dictated by your personal life. You may have school, you may have a job, you may have a family life that says you don't have much time, but you have this small little window of time in the day, or this day of the week even, where you have to do whatever you're going to do in trading that day and only then. Now, I don't have an answer for something so specific as that because, let's just face it, there's enough to go around in terms of opportunities, but when you make your universe so small and so finite that you can't really breathe as a trader, unfortunately, you're going to have to make some adjustments and changes to your personal life and make yourself more accessible. And if that's not possible, then you're going to have to defer trading at a later time when you can do so. That doesn't mean you can't learn by looking at hindsight. But in my 20s, when I first started doing this, I was very anxious that I was always going to miss the next moves. So it kind of like was the catalyst for me to sit down and try to figure out, what it is that I have to concern myself with in advance. So that way I wouldn't have to be obsessively thinking about the fear of missing a move. But little did I know, I didn't even understand what constituted a setup that would realistically form because I was at the delivery of whatever indicator I was using at the time. So I had to yield myself to, I have to wait until that indicator does this. And because I was working, I was driving a truck, I could only see the numbers on a quote track. That wasn't giving me the indicators. That wasn't telling me if it was overbought or oversold. It didn't tell me if there was a type 1 divergence, just a classic divergence where the indicator fails to make a lower low when price makes a lower low or makes a higher high in price but fails to make a higher high in the indicator. That's a traditional, typical type 1 divergence. And I started off trading that. That was like my thing on an hourly chart with a 50-day moving average. That was all I did. And when the markets are going up predominantly and you're taking oversold conditions like that, it's pretty much a no-brainer. And that was my initial luck in the marketplace because I was only doing one thing. I was a one-trick pony, scared to go short, didn't even know what that meant. But in a truck, like you in university, or you working a job, or you having constraints that your family says you can't do it as much as you really want to because you have responsibilities as a father, as a mother, or whatever. So you can't be in front of the charts when that indicator indicates that there's something for you to do. And that was problematic for me. I wrestled with it. I tried to come up with all different kinds of ways to work around that. And every time I did it with real money, I lost. Every single time I tried to make little subtle changes and tweak it here and tweak it there, trying to crack the code of absentee trader, that type of approach. And it didn't work out well. So the Lord basically said, listen, you got to start studying what has happened at very specific times. Pay attention there. Look there. So when I started looking at charts like that, I stopped looking for how many times a divergence formed. And you've probably done that in the past before you come to me, or maybe it's the same thing with my information. You look at old data, because I encourage you to back test. I encourage you to collect opportunities where it's happened in the past. And you get excited, like, wow, man, look how many times it happens. And you start collecting it and you start thinking to yourself, I've seen it work like 18 times out of the last 20. So even if I mess it up, see if I do it, half-assed and I go in, I try to do it just a little bit less than what ICT would approve of if he was sitting next to me, I still probably have a good chance of making a grand at least a week with my funded account, or at least pass my funded account, or get a withdrawal from my live account. And you kind of like sweet talk yourself into it. And I did all that stuff too, folks. I did all those things. But you have to look at how often you have the opportunity to be in front of the charts. That has to be completely worked out in advance. Otherwise, it's going to be a source of stress. If you're in a relationship and they're not on board with what you're doing, they don't care that you really believe that you're going to make money because they didn't see you do it yet. They haven't seen you do it week after week, month after month, year after year, and replace your job with it. So they're not going to have the same affinity for it that you do, or that you're trying to muster. You're trying to encourage yourself to stay focused, to be diligent, do what ICT says, focus, cut everything out. That's hard with your family. That's very, very hard. And I paid a price at doing that. So one of the things that I felt led by the Lord to do is stop looking for the frequency of indicators. And I started looking for the frequency of price delivery. When did the market generally create these repeating price runs? And when my mind shifted from indicator-based revelations in price to that of what tends to happen systematically, what tends to happen on a almost time-based schedule. Not every day, not every instance at that specific time or that day of the week or that month, but by far and large, it usually happens. And in and of itself, that is a huge advantage. And that's what got me excited, where I would have the energy to work 13 hours with drive time back and forth and stay up into the wee hours of the morning on work days and go to work with 2.5, 3 hours of sleep, driving, cranked out on Dr. Pepper, Mountain Dew. Like they were my energy drinks. Okay. And I would just literally just plow through my route as fast as I get done. And it never got any done any sooner. But I was so excited to go home and see what the market did. Now, sure, I watched it on my Quotrek, which was a little handheld device, kind of like an old transistor radio. And for those of you who don't know what that is, you can Google it and see it. I had that duct taped on the windshield of my truck. And I'm delivering candy and cakes and servicing coffee machines and soda machines and cold food machines. Trying to get home so I can see what I can do tomorrow. And that completely changed when I said to myself, I have to worry about one thing. I got to be on time. I got to be on time in every sense of the word. I got to be on time to be in front of the charts when it should move. See, that's one of the biggest things that I discovered when I was chasing every educator, every author, every book that came out, every new course, every new thing that came out, every new gimmick. Every person mentioned that this is the person. This is the person. And you see it when I make a post on X and other people that have a larger following. When they make a post, you see these bots that come up. I stumbled upon this guy here, this gal here. She's doing amazing things. Thanks for making $10,000 for me. That kind of stuff worked real easy back in the 90s. And I fell victim to that kind of stuff. Today, it's kind of cheesy and nobody should pay attention to that. Because if you're chasing constantly, and maybe I'm one of those individuals for you right now, if you listen to what I'm going to talk about today and really take it to heart, I promise you, you won't chase anyone else ever again. You'll stop and you'll look in the mirror and say, I am all that I need. It's very simple in terms of trading, but what makes it hard is you can't get out of your own way. And I was like that for myself. I complicated things. I wanted to be perfect. I wanted to be right. I didn't want to lose. I only wanted to have an equity curve that went straight up. I never wanted to miss a move. Now think about the practicality of that. Is it realistic? No. But as a young 20-year-old and making a little bit of money in the beginning with luck, you tend to lie to yourself and you say, man, I'm the bee's knees, baby. I got this all figured out. I'm not natural. I wasn't good in sports, but look how good I'm at this. So you fill your head up with all kinds of nonsense and you start believing it. Until the market shifted from a bull market to a bear market, and then I couldn't do anything right. So I had weekend anxiety. I worked all week to make very little money, to spend the weekend stressing. And maybe you're feeling that. And I wanted to gently remind you that you're thinking about it too obsessively. And you're placing a scheduled arrival of your understanding that you don't know when it's going to happen for you. But you have to free up that possibility for you to have it happen whenever it's supposed to happen. As long as you're diligent and you apply yourself every single day, even if it's just 30 minutes a day, studying, looking at what the price is already done, but specifically studying when it did it, on what day it did it, on what week of the month, of what year, 12 months, what months are real active. When I listened to Larry Williams in his course, he mentioned this day of week. And I'm like, this guy's got it down like that. No wonder he turned $10,000 into $2.2 million. You heard that right. He just got hurt and dropped down and drawdown, but ended it with over $1 million for the year. So I was thinking to myself, if he's got it figured out like that, he's got himself to a position of control over himself. Now, maybe if you listen to him and when he's been honest and he's came out and said, look, it was real hard to be around him that year in 1987 because he was focused. He was really dialed in. He had no time to be, talking with anybody else, even his family members. I'm sure I can relate to that because in my 20s, that's how it was every single day. Every single day, I felt like I was in the Robbins Cup, and I was only trading with a $1,500 account. I was trying my hardest to do it on a credit card loan. And you guys got it made, man. $100 here, less than, and you can have the imaginary $50,000 funded account. Come on, man. You have all the advantages, but you're placing so much emphasis on being there right now, so fast, it's unrealistic. And when you can't fulfill that, you can't live up to that, you start beating yourself up. Even if you don't journal, you're talking to yourself while you're driving. You're talking to yourself in the shower. Man, I'm so stupid. Why'd I do that? Isn't it amazing how after you lose, after you blow an account, you start thinking how great that trading system would have been if you just would have followed it? Like, I did all those things, built up this plan. This is what I was going to do. And then I did everything but that, lost money, and now you really love the trading plan. It's like a girlfriend or a boyfriend that you didn't really appreciate when they were with you, but when they're gone, absence makes the heart grow fonder. And I went through this cycle over and over again, looping. And I said, you know what? The problem is I'm not on time. I'm never on time. So I have to be acclimated to when the market is going to do something. So it was very amazing, astonishing, revelation for me to go through time-based studies and see that there is this repeating thing that happens all the time. All the time. It does these things over and over and over again. So when I sat down, I thought to myself, I'm going to make a market where I can codify, where I don't have to think about it. I don't need to think about it. I'm going to codify PD arrays that tell me exactly when I'm going to do something, because I know the market's likely to deliver a specific type of price run at that specific time, up to a very specific time. Now think about it. If you knew the 3-digit number on the lottery, was likely, not perfectly, but likely to give you 808. I'm just using it because it's my birthday. If it's likely to do that in this month of the year, are you going to play that 808 number every single week and day outside of that? No, of course not. You're going to do it when it's seasonally apt to deliver it. Are you going to be, as a card counter or a professional poker, are you going to play a table where the shoe of cards gets cold? You're not going to do that. You're going to get up and walk away. What are they doing? They're getting in sync with time. The time of that synchronicity of how those cards are going to come out and how every other card player at the table is going to play them. You think about it. You do these things in your own personal life. You only want to spend time watching the games that you have an affinity for, the teams that you care about. There's lots of games on the weekend, all kinds of sports, but you're only going to plop your rear end down and vegetate on that couch when your team's playing. Doesn't matter who they're playing. And ladies, there's all kinds of TV shows on. All kinds of TV shows on. But your story, your program that you want to keep up with, because the girls at work or the girls at your clique, they keep up with that too. So you want to make sure you're constantly invested in that, so that way you're not outside the loop when we're having conversations at the water cooler. You're on time. But when we get into trading, and then we're not prodded to do these types of things, what happens is we lose sight of it. And we chase every red herring that's out there. By every charlatan that's waving a banner saying, come at my Telegram, come at my Discord, come join my mentorship, follow my signals, follow my methodology. Because you think that's the easiest, fastest route to getting to make money. When it's not. You're just putting yourself further and further behind. When I stopped and I said to myself, okay, listen, I'm only looking at daily charts and 1 hour charts. That was my perspective. I didn't look at anything less than an hourly chart. I couldn't do anything with less than an hourly chart. I wasted so much time chasing things that led me no closer to being profitable or ever consistent. But I kept telling myself, doing these things will get it, and it never did. Until I woke up and listened to the advice that I felt God tell me to say, look in the charts for when it continuously repeats these types of things. Look here. Look here. That's what I heard. Sometimes it was audible. Sometimes it was inside my spirit. Like sometimes it was my own internal voice. And it sounds crazy if you don't have any faith in him, but that's how it worked. That's how it happened. And I started looking for price runs that would occur at the open at 9:30 for S&P. When the currencies would open up, because I traded currency futures, not Forex. I didn't really gravitate to full Forex until 2006. I traded Forex a little bit earlier than that, but I didn't touch it completely and 100% leave everything behind until 2006. But I was a futures trader, a commodity trader in the beginning. And I got real comfortable trading currency futures. Deutschmark, Swiss franc, yen. I loved the yen back then. I hate yen now. British pound, Canadian dollar, all that stuff. All the com dolls. And I loved them because they had a gap opening every single day. Every single day. And you've seen what we've been doing with index futures with gaps, right? Apply that same logic to currency futures. Not Forex, currency futures. And you'll see similar things are there. There's a price run that always took place at a very specific time trading bonds. And once I discovered that, I locked onto that and said, I don't care about currency futures. I'm a bond trader. I'm a bond trader. Because I saw something in that market first as it relates to time. And I said, well, now I didn't do it right away. It was months and months in the first year of me doing it. I was like, wait a minute. I'm talking to my uncle and I'm telling him, I said, Uncle Stan, like I got something in bonds. It's just so good. But I'm afraid to talk about it because I'm afraid if I talk about it, I'm going to jinx it. And he's already proven it at that time. He's not interested in listening to me. You can see he wants to be a contrarian. I'm buzzing on this idea that I got something that nobody else has talked about. No one else talks about this. I was even afraid to ask Larry Williams by writing to him and saying, listen, do you, because I was like, maybe he doesn't know. And if it's really, really good, he'll treat it like he did with the turtle stuff and, he'll teach it. I didn't want to share it with anybody. I was like, this is so good. I don't want to share it with no one. And I said, you know what? Let me see if I can start doing that same thing in my previous favorite markets, the currency futures. Wouldn't you know it? It's right there too. And I'm like, what in the world? How did this escape me? All this time I'm looking at 50-day moving averages and stochastics, five by three smooth on a Williams percent R and stochastic when they agreed it was overbought, oversold, but the divergence occurred in one or the other. It doesn't matter. It didn't. Both of them didn't have to diverge for me. But when they were oversold and one of them diverged bullishly, the next day I'm waiting for the open, and I'm waiting for it to go down below the opening, and I'm going to buy it on a stop as it goes back above the opening price. That was my methodology then. That was the very first inner circle trader. This is my step by step. I'm not thinking about it. I had to have a mechanism like that to get me in because I couldn't be in front of the phone constantly call the orders in. So I had to put resting orders in, but I had to get that opening price, and I could get that on the Quotrek. As soon as it popped up on the screen, boom, I got my opening price, and then I watched and see if it started trading lower. If it went lower when I was looking to go long the next day, and the next day is what I'm looking at in the charts, not the charts, on the Quotrek with my truck, I would already have the phone number from my broker in my hand, running to the payphone, because that's how we did things back then. I had to have quarters in my pocket, run to the payphone, or if I'd run into an office building and I was doing the delivery for the snacks and cakes and whatnot, I would ask somebody, look, can I borrow your phone real quick? I got to call the office. And yes, I was lying back then, okay? But I was desperate. I had to get the orders in. So I'd call, had to wait for them to answer the phone. Lynn Waldock, yes, H desk, please. Hold 1 second. The whole time the market's moving around. Imagine doing this today with the volatility. It's nerve-wracking. But you place your order, buy on a stop above the opening price. Stop losses, back then I could tell the broker, whatever the low was, that's where I want my stop, one tick below that. That was my mechanism. I could only afford one contract. I was trading mid-AMs, which is kind of like the equivalent of a half a contract for today. Like we have mini and we have micros, which is 1/10. Well, back then we could trade mid-AMs, which were like half the size of a full-size contract. And then I'd watch and stress about it all day long. And in the last part of the day, it would flurry and move in my direction. And when I was right, and I was like, yes! Woo! Do my Ric Flair strut, coming out of the truck, getting into a new office building to get my inventory. I got to fill back up in the machine. It was fun. It was fun when I was winning. When I was losing, it sucked. Because when I lost, I felt like I wanted to throw everything away. But the time-based aspects of what I was doing right, that has never, ever escaped me. I've never turned my back away from that. I've had entry strategies I created for myself, and I've abandoned them. I've had full-blown trading plans that I've abandoned. But I've never, since discovering these very systematic time-based price runs that occur in price action every single day, every single week, in every market, I've never left it. And last year and this year, I've been teaching it slowly. I've been revealing a lot of those things to you. Some of them, well, you saw in the silver bullet. As soon as 10 o'clock forms, all you need to know is what direction it's moving. Now, some of you obviously stress about this. You make it so hard when I've already taught how to do this. You want an everyday bias that's 100%. And you're not going to get that when you're first learning. Learning from me while I'm calling the market, you can get an intraday bias that's pretty much almost as close as perfect. But still yet, not perfect. So you're building in no allowance for doing it wrong. Even if you have strategies like I have that are very specific time-based runs, knowing for what liquidity it's going to reach for, but but you're demanding perfect. You're demanding perfect. You get caught up when I say, look how the algorithm delivers perfectly. That's not me saying, look how you perfectly traded that bottom tick, top tick, and you got nothing left on the bone. That's not what I'm saying here. But because you're young as a trader and you're very, very influential and you're very subjective about what you listen to, you only want to listen to the good sugar-coated stuff. You ignore me when I tell you you're going to lose money. You ignore me when I tell you you're not going to be perfect. It's going to be hard for you. You're ignoring all that. And the ones that do really well, and by the way, again, round of applause for Kyle. Another monster, like I told you. Kane, Kyle, and who else is going to publicly come out? ICT stuff don't work, bro. These concepts, this is going to lead to you knowing what to do and when to do it. But that silver bullet, if you know what the bias is for that session, you don't need to know it for the day. Throw that out for right now. You learn that over time. How do you know what the session bias is going to be? Well, how did we gap open? Did we gap open? What liquidity did they leave in pre-market session? That means 7 o'clock in the morning to 9 o'clock, 9:30 in the morning opening for equities. If you're trading Forex, between 7 o'clock and 9 o'clock. Very simple little windows. And you're looking for these periods of where there are smooth highs or smooth lows, because that's where the market's going most of the time. Not 100% of the time, 80% of the time, we'll call it that. Call it 75% of the time. Oh, that ain't good enough. 75% of the time, it ain't worth my time, ICT. We ain't got time for 75% around here. If you can't get it up higher than that, there's rookie numbers, we got to bump them up, or I'm going to move on to somebody else. Go! Don't let the door hit you in your ass. Goodbye. Laziness doesn't survive around here. But knowing that there's going to be a fair value gap every single day at 10 o'clock to 11 o'clock, it's going to form, and it's going to give it to you on a silver platter before it runs to that session liquidity. It happens every day, and I challenge you all to not believe me and start looking for it. See, you've watched me do that silver bullet. You watch other people prove they make money with it. But you've never really sat down and said, how often has it failed? That's what you were instructed to do. Because that's the stuff I walk on. I moonwalk on all these supposed professionals, these guys that, I'm a so-and-so floor trader. I'm a so-and-so at blah, blah, blah capital. Bro, come out here live and I will sing a dance as these candlesticks go up and down to my music sheet. That's how it works around here. I'm the composer. I'm like Bugs Bunny. Remember that? He raises his fingers up, and the concert pianist and the concert, orchestra, they're out there trying to keep up with his intensity. That's what it's like. I'm the Pied Piper, and these candlesticks, they follow me. And that sounds arrogant. Yes, it does. And I'm okay with it. I'm okay with that. I don't care if you're not okay with it. The proof is in the pudding. The markets are going to gravitate to liquidity, but you have to know how to define that. It's session liquidity first. First and foremost, it's session liquidity. What does that mean? Well, the morning session, the afternoon session, the lunch macro. If it's going to retrace on whatever move it was in the morning, what's it going to be? Move against the trend that was happening in the morning session. Find the easiest low-hanging fruit low. If you can trade that and find profitability that yields enough of a payout for you, then take the trade. But there's lots of trades that pass me by all day long, where they're only 10, 15, 20 handles. I can do them all day long. I don't care about them. They're constantly there. They're like a McDonald's or a 7-Eleven. They're on every corner. Drive down the road a little bit more, you're going to see another one. I'm not worried about them. I'm stopping at the bus stops, like where my wife's standing there. If I see my wife standing at a bus stop before I met her, I'm stopping at that one and say, honey, you need a ride because I'll take you where you gotta go. And you're gonna enjoy the ride. I'm not slipping in Nick DD's fast food drive-through, okay? I don't slum it like that. I'm looking for the best setups. I'm looking for the things that make sense for me, because I'm not a micro lot trader. I'm not a one lot trader. I'm in here trying to get something. And I want my time to yield to me a bountiful harvest. I want something that's going to be worth my risk that I put on, but also deliver gangbuster results. Like bang, like Emerald Lagasse. Remember him? He would just say bam, put his spices on it. It was fun to watch. Otherwise, it was kind of boring. But when he did that, it was great.